Welcome back to the Daily Crypto Roundup. Today is Saturday, December 27th, and this is your full, same-day breakdown of what's happening across the crypto market right now. As we move deeper into the Christmas period, trading conditions are thinner, liquidity is patchy, and price action can look confusing if you only glance at a chart. That's exactly why we're still here. Markets don't stop because it's Christmas. Money doesn't stop moving. Policy discussions don't pause. And people still want to understand what's going on, whether they're working, traveling, or just trying to keep their head straight in a noisy market. Before we get into the detail, here's a quick overview of what we're covering today. We'll start with a brief snapshot of where the major crypto prices are right now. Then we'll move into the key stories shaping sentiment today. That includes Bitcoin failing to participate in the so-called Santa rally, while stocks and precious metals push higher. A growing divergence between crypto and traditional markets. A bearish analyst thesis on Ethereum heading into 2026. XRP holding steady as equities hit record highs, and institutional narratives continue to build. And finally, the broader psychological picture of what it means when crypto sits out a seasonal rally that many investors expect. Let's start with the prices, just to ground ourselves. As of right now, Bitcoin is trading around $87,443. Ethereum is trading around $2,929. Binance Coin is trading around $839. XRP is trading around $1.85. Solana is trading around $123. Cardano is trading around 35 cents. Dogecoin is trading around 12 cents. And Tron is trading around 28 cents. That's the snapshot. No drama, no fireworks, but also no real momentum. Now let's talk about what's actually going on underneath that surface. One of the most striking stories today is not about crypto in isolation. It's about what crypto is not doing, while everything else seems to be doing just fine. Traditionally, the end of December is associated with what's known as the Santa rally. In equities, this refers to a period where markets often drift higher into year-end as liquidity returns, sentiment improves, and positioning resets. This year, stocks have broadly lived up to that expectation. Major equity indices are sitting near record highs. Precious metals like gold and silver have also been strong, pushing higher and reinforcing their role as defensive assets. Bitcoin, however, is sitting this one out. This matters because Bitcoin has increasingly been framed as a macro asset. Over the last few years, it has been compared to digital gold, treated as a hedge, and traded alongside broader risk assets. When stocks rally and metals rally, and Bitcoin does not, it forces investors to reassess how they think about crypto in the current environment. The immediate explanation is liquidity. Holiday trading conditions reduce participation, and crypto markets are especially sensitive to changes in volume. That's true, and it's part of the story. But it's not the whole story. If Bitcoin were seeing strong underlying demand, even thin liquidity would exaggerate upside moves, just as it exaggerates downside moves. The fact that Bitcoin is flat to slightly lower while other markets are pushing higher suggests something deeper, and that is hesitation. This hesitation is showing up across the crypto market, not just in Bitcoin. Altcoins continue to struggle. There's no broad rotation, no sense of risk appetite spilling over from Bitcoin into smaller assets. Instead, capital appears to be content to stay on the sidelines or remain concentrated in the most liquid names. However, leading market analyst Lark Davis says that the long-anticipated crypto bull run didn't fail. It was simply delayed, and 2026 could become the true inflection point for a sustained rally. Davis notes that bull markets rarely begin in moments of optimism and tend to take shape when sentiment is exhausted, pessimistic, and deeply skeptical, which describes much of the environment in 2025. He believes that a combination of improving liquidity conditions, increased capital expenditure in key sectors, and broader macro tailwinds could set the stage for a structurally stronger market next year. That brings us to the idea of divergence. Right now, crypto is diverging from traditional markets in a very visible way. Equities are strong. Precious metals are strong. Crypto is not collapsing, but it is clearly underperforming. That kind of divergence tends to create frustration among holders. because it feels like crypto is missing out while everything else is moving. But historically, divergence periods are often when narratives change. In previous cycles, Bitcoin tended to move first, then altcoins followed. In more recent years, crypto has sometimes moved in lockstep with equities. Now we're seeing something different again. Crypto is behaving like its own asset class, disconnected from the optimism elsewhere. That can be interpreted as weakness, but it can also be interpreted as the market waiting for a different catalyst. We are going to pause here for a quick word from our sponsors. Stay with us. Now let's talk about Ethereum, because Ethereum has its own story today, and it's an important one. A prominent analyst has suggested that Ethereum is unlikely to set new all-time highs in 2026. That's a bold claim, and it's worth unpacking, not because it's necessarily right or wrong, but because of what it represents. Ethereum has long been seen as the backbone of decentralized finance, smart contracts, and much of the broader crypto ecosystem. For years, the assumption has been that Ethereum will eventually surpass its previous highs as adoption grows. So why would someone argue the opposite? The core of the argument is structural. Ethereum has matured. It's no longer the scrappy upstart of the crypto world. It's a large, complex network with significant competition, regulatory exposure, and scaling challenges. While it continues to be widely used, growth is no longer exponential in the way it once was. Fees, competition from alternative chains, and shifting narratives around where innovation happens all play a role. From a market perspective, this kind of thesis matters because it challenges complacency. When investors assume that something must go higher, simply because it has in the past, they stop thinking critically. A bearish thesis forces the market to confront risk. It also forces Ethereum holders to ask whether the next cycle looks the same as the last one, or whether it evolves. This doesn't mean Ethereum is doomed. It means the easy narrative of automatic upside is being questioned, and that questioning is happening at a time when the entire crypto market is already feeling cautious. Now let's move to XRP, because XRP is telling a very different story. XRP is holding near $1.84, while US stock markets trade near record highs. On the surface, that looks unremarkable. But when you dig a little deeper, XRP's relative stability becomes more interesting. Unlike many altcoins, XRP is not bleeding aggressively, it's holding its range. And that suggests a different type of participation. And what's more, it continues to be linked to institutional narratives. There's ongoing focus on regulated products, banking-related developments, and the idea that XRP sits closer to the traditional financial system than many other crypto assets. While on-chain activity has not exploded, interest from a structural, institutional perspective remains present. This creates a dynamic where XRP can appear boring in the short term, but resilient. In markets like this, resilience is not a bad thing. When risk appetite is low, assets that hold their value tend to attract attention later, once sentiment begins to shift. Now, zooming back out, let's talk about the broader psychology of what's happening right now. The absence of a Santa rally in crypto is affecting sentiment. Many investors expect seasonal patterns to repeat. When they don't, disappointment sets in. Disappointment can quickly turn into doubt. And doubt is contagious. You see it in social media posts, in comment sections, and in the tone of discussions. People start asking whether the cycle is broken, whether the narrative has changed, whether crypto has lost its edge. But markets don't move on emotion alone. They move on structure, incentives, and positioning. Right now, one of the biggest structural factors is positioning into year-end. Funds are closing books. Traders are reducing exposure. Nobody wants to blow up their year in the final week of December. That creates a bias toward caution. At the same time, expectations for the new year begin to form. People start thinking about January flows, about policy shifts, about what 2026 might look like. This is where the absence of a Santa rally becomes less important than what comes next. Seasonal patterns matter, but they are not laws. Sometimes markets skip them, sometimes they invert, and sometimes they simply delay. Another important factor is that crypto has changed. It is no longer a small, niche market driven purely by retail speculation. It is larger, more institutional, more regulated, and more complex. That means it behaves differently. It does not always respond to the same seasonal impulses as equities or commodities. Now let's bring this back to something practical. If you're holding crypto right now, the key takeaway is not panic or blind optimism. It's patience and awareness. The market is not offering easy signals. That means you avoid overreacting to short-term moves. Thin liquidity can create fake breakdowns and fake breakouts. You don't want to make long-term decisions based on short-term noise. If you're actively trading, risk management matters more than prediction. In low liquidity environments, price can move sharply without warning. Stops get hunted, levels get violated briefly, and then reclaimed. This is not the environment for oversized bets, unless you're very experienced. If you're investing long-term, this period is more about narrative than price. Ask yourself which assets still make sense in a world where crypto becomes more integrated with traditional finance, not less. Which networks benefit from regulation rather than fear it? Which projects are built for scale, compliance, and longevity? Bitcoin is holding near key levels but failing to participate in the broader year-end rally seen in stocks and metals. Altcoins remain under pressure, with no clear rotation underway. Ethereum faces new skepticism about its ability to set fresh highs in the next cycle. XRP is holding steady, supported by institutional narratives even as broader sentiment remains cautious. And the absence of a Santa rally in crypto is forcing investors to confront the idea that this market may be evolving into something more complex and less predictable than it once was. This isn't the loud part of the cycle. It's the reflective part. The part where expectations reset, narratives shift, and positioning quietly changes ahead of the new year. We'll continue covering it daily, right through the Christmas period and beyond, because this is exactly when context matters most. Drop your thoughts in the comments, smash like, follow, and we will see you at the top.